Welcome back. The Dow's down about 200 points. We're off session lows, down 0.5%. The S&P down 1%. Less than 2% declines now for the Nasdaq and Russell. And the volatility index is back below 20. So a little bit of a breath here by markets, which had been rattled when Iran launched that missile attack on Israel, which intensified at the top of this hour, seems to be settling down and having dissipated somewhat now. Let's bring in Lee Munson. He's Portfolio Wealth Advisors President and CIO. Lee, do the developments of this afternoon, this week, this year, change what you do with equities here or with markets more broadly?
I'm looking at what the response is from bond markets right now to help me figure out that question. I'm seeing a 10-year that's still above a 3.7. I think that's telling me right here, right now, unless we see that start selling off and we're at a 3.6 before the end of the day, that's telling you that future growth is not being affected by this. On the contrary, I think future growth is just going to be going up. We're going to have more deficit spending next year because we're remilitarizing our armed forces. And that's going to be a big theme. I know Jamie Dimon from JP Morgan, he's been talking about that earlier this year. I've been talking about it too. We're not living as a superpower anymore. We're multipolar, and a lot more money is going to have to be spent. And I think if you look at some of these projects like the hypersonic missile program, which we're so behind on in this country, and you start looking at where we're making munitions, where are we manufacturing the bombs that have to get on those planes, I think you're going to be seeing a huge increase in spending. So while I can't tell you right here where my favorite defense company is, I like TransDigm, and they're more in aerospace, I understand the trade. But I also think this is a warning. Don't think inflation is going to be going down as much as forward rates are saying. It's this type of stuff that's going to keep inflation sticky.
I'm glad you brought it back to that and to what's happening with bonds. Does that make a lot of people might be looking at it now and saying, hey, this was great to own for the past couple of months, but now maybe not so excited to sit on them going into next year? Stanley Druckenmiller making similar comments at Grant's conference today.
So I got rid of all my 10 and 30-year bonds. I sold them in 4 pieces after the Fed announced because I wanted to be sure. And I got out of them, I believe, last Friday. So I'm out of all of my 10 and 30-year treasuries. I bought them last August at a good price. I bought them last October at a really good price. So I think if people were sitting on this trade, they're up 5, 10, 15% from the pop in yields last year, I would use this as an opportunity to unload. That's what I did because I'm playing my own game with my clients. I also bought right. But I think that we could see those 10-year yields float back up, not just in a year, but in the next 3 to 6 months as we realize the Fed's going to go slower, the stuff in the Middle East, the stuff in Ukraine is going to take longer, and the spend is going to be huge.
Does this support equities? So when we watch, anytime you see the VIX go up, something like this, maybe it's a one-off, but it sort of has, the market has that memory. Does this make you at all biased to be less bullish into year end now, or does it actually support equities performance because of deficit spending and all the rest of it?
Supports, I'm bullish. I'd love to see a 3 to 5% pullback. I'm unafraid.
You're buying it, it sounds like, if we get that.
Yes, I'm a buyer. I'm a net buyer. I want to be overweight going into next year. The only thing that could hold me back is maybe seeing 6,200 on the S&P before Christmas.
Wow.
It may make me be neutral. Don't think that can't happen. Nobody's prepared for it. I would pull back a little bit if I saw that because you're paying 21 times next year's earnings. It's a little too... Yeah.
That would be a major move. Buying equities, selling bonds. Lee, thanks for joining us this hour. Lee Munson,
Thank you.
Portfolio Wealth Advisors. That's it for the exchange.